welcome. I'm here with Cody A, and I feel really honored because he hasn't posted a video recently, but this is his reintroduction to YouTube. And I think that after listening and watching some of his recent interviews and some of his podcasts, I think that he's an incredible guest. And I wanted to discuss with him his trading strategy and how he got into trading options. And Cody, if you can discuss your trading strategy for the audience, then that would be fantastic.
Yeah, thanks for having me, Dave. I mean, ask away. Yeah, I haven't posted a YouTube video in a while, but doesn't mean I'm not doing anything. I have hundreds of alumni since the past year, official alumni, and yeah, now I start a new mastermind where I read news for people. I share my trades, which was only available to my VIP. So it's really helping people mitigate the risk, having more rewards, and save people more time. So I think we're both on the same page.
Definitely. And how did you get into trading options? Did you try like other trading strategies previously?
Yeah, great question. So I learned about stock option in second year of university. That's 10 years ago. And I started just investing in bank stocks, right? You talk about you work at CIBC. I just invested in some TD RBC, get some dividend, right? The boring stuff. And until 2015, that's when I was introduced by a friend to my day trading coach. She was 2 years younger than me. She has no YouTube, no social media, no following, very low key. But what surprised me is she was managing a multiple 9-figure account.
Wow.
And I wouldn't believe it until I saw how she trade. She was playing with the Taiwanese future index. So it's kind of like the equivalent of mini S&P 500 or S&P 500. So as you know, it's inherently leveraged, right? So her whole system of reading charts, risk management, taking profits was very fascinating for me. So that's how I start. But I soon realized as a second job, because I'm trading in the Asian market, when I still have a full-time job, it's almost very, very consuming my whole life. I have not much friends. I couldn't go to a lot of real estate seminars. So I know that I could not do this for a whole life. And that's when I started playing a different option strategy, right? And the strategy I'm teaching now, which is I think is your main strategy for my beginner course, is selling option. And this is a strategy where you can spend a minimum amount of time to earn, let's say 1 to 4% in my experience. And it's very hands off, and you can sleep at night. And really, at the end of the day, it's not the ultimate return. Is what's your return on time and the lowest return on stress, right?
I love when you say that. For clarification purposes, when you said 1 to 4%, you're referring to the monthly expected return,
yes,
right?
Yeah.
Based upon like the net liquidation value. And I love when you talk about the earning that money almost passively, because when you're selling put options or call options, it's almost like you're creating a synthetic dividend. So, but at the same time, because you have positive theta decay and the time value is working in your favor, and you also have that safety net by selling an out of the money option, whether it be a call or a put option, then you can be wrong and still make money. Is that something that you agree with?
Yeah, it's actually one of my alumni told me that, Cody, most of the time I'm wrong, but I am right because I'm still making money. This is crazy, right?
Yeah.
With a lot of my alumni are real estate investor. They've been told, don't touch stock market. It's a gambling. It's a casino. Don't do it. Don't do it. You're going to lose all your money. And right now, most of my alumni are real estate investors, and they're quite successful at doing this.
And selling premium, was that one of your first trading? Like, what was the primary reason behind settling on this strategy? Because I know that from my experience, I tried to hit home runs by like day trading or buying options, and then it just became too stressful. And I never found a consistent way to profit from it. I felt that even if I made money on a trade, it was just luck, but there wasn't that much strategy involved. Whereas with selling options, I feel like I have much more control over the outcome. I can sell options, and then maybe 90% of them, they don't even get challenged. So I close them out
Hmm.
early or they expire. And then
Hmm.
for the 10% of the trades that end up getting challenged, I manage them. And then as long as I don't lose money on those trades that get challenged, then I can, make a good amount of money with very limited portfolio volatility. But how did you settle on selling options as the best strategy? Did you try other strategies beforehand?
Yeah. So when I was day trading, I was literally picking size by buying or selling index future contract. Now, about that, we have a totally different system. We only use 10% of my money. Why is that? Is because if I lose all of the money, I only need to make 11% to come back.
Right.
That is the key part. A lot of people don't get that, right? That's the most basic math. I know you're really good at math. So anyway, talking about that, it's all great, right? Our strategy at that time was we take small losses, but when there is a trend that goes, we have to capture 60 to 70% of that trend. That's where we make most of the money, so we can keep getting grind down. And we have another one because most of the time in the market, I won't say most of the time, but 60 to 70% of the time, the market is oscillating. It's fluctuating. There's no direction. Only 30% of the time it has a direction. So when there's a direction, we have to capture that. That was the day trading side. Now, when I was day trading, I know I could do it. I want to prove myself. The first 4 to 8 months, I was losing money. My coach was telling me, "You're gonna lose money." I'm like, "What the heck is going on?" I mean, I hire you for a reason. She's like, "No, you're not mentally ready, because there's a human side. You try to protect yourself. So whenever you see profits, you want to take it. Whenever you see losses, you want to wait, right? And now you're training you to do the opposite. It's like so unnatural, right? So I know if I get really good at it, I was really good at it, but I know I couldn't teach anyone. No one can replicate this. So what's the point of me having making all the profit, but I couldn't teach anyone? Friends and family, they'll lose money because it takes a special character to be a day trader. And that's why I started playing with, just stocks. I'm like, okay, maybe a bit too slow. Okay, I try buying calls. I try, like different like the straddle, iron condor, strangle, all that. I made, credit spreads, all that good stuff. It's great. So I kind of know that, hey, if I put in more time, I need to manage a lot more as well, the more intermediate advanced strategy. So at the end of the day, what's my hourly rate with my return? And I soon realized that more time doesn't mean more return, but it
Right.
definitely means more stress. Means that when I'm on vacation, I have to look at my phone constantly, so I'm not there. I want to be present. When I'm here at this interview, I want to be present, right? And at the end of the day, I'm like, hey, you know what? I'll scale back on the return a little bit, but if it's 1 to 4% per month, it's still better than index, still better than most of the mutual funds, and I have full control. I can sleep at night. And that's why I settle on this, right? And my beginner course is fully about selling puts and then cover call. But the intermediate course where now that everyone understands that, then we can talk about how do we use some of those premium profits and use a small part of it to use intermediate strategy to potentially increase your return. But we know if we lose it all, we still have our basic there from selling option, from just the simple selling puts cover call. So instead of making, 24% per year, I could potentially make maybe 40 or 60, but the worst case, I make 24. And I'm okay with that, right? So you have to have those risk management and portfolio sizing concept, right? And that's what I talk about for more intermediate traders because it's very important.
And what type of companies do you target? Do you sell options on underlyings that are highly liquid, that are more speculative, that are large cap? What type of companies do you typically target?
Very good question, Dave. So um, it's a balance between value investing and growth. I think you probably see the trend. The traditional CFA way of value investing is no longer working. People are
Yeah,
very impatient these days.
yeah,
Dividend are not a key. There's a lot of dividend stocks just keep going down. And for the past like 7 years, the dividend aristocrats start to shift, right? The growth stock perform a lot better. They can be barely making money, but the stock kept going up compared to a boring value investing stock. So how I get a good balance is that, yes, I want it to be a blue chip, right? Has a high liquidity, has a good name, has a product I use myself preferably on a
Yep.
daily basis. The company has been doing well for the past 5 years. Revenue has been going up. Bottom line net income has been going up. Profit margin has been going up. Then I'm comfortable, even if the company is only making a bit of money. But if it's like long term, we know they're innovating, they keep reinvesting their money into the company, I am okay with that. But I have one end is more high growth, but at the other end has a little bit of dividend, but still a bit more of a growth as well. So I don't just look at the traditional, hey, the dividend way, or just like very like number stuff. But you kind of have to balance both, some value, some growth. But you want to make sure the company's already making money.
Do you look
Already
at
making money.
do you look at the financial statements, or do you mostly look at the price action, and then you say, okay, like a stock like Tesla or maybe a stock like Amazon like 10 years ago when it wasn't making money, but you realize that it keeps going up like year over year, and then you believe in it because it has a strong brand, you use it, or does it depend upon the underlying, whether you look at the financial statements versus you look at the trends and the momentum?
Very good question. And you know what? The baseline of my entire strategy is fundamental analysis. I rather get into a more boring stocks with good fundamental than a stock that paints the picture, a really nice picture. The reason I said that is, Tesla, Amazon, what you're talking about, they're barely making money, but they're starting to turn it positive too. So the moment they turn positive, then I start considering it. But when they're not, I'm not considering. I don't mind missing out, but I want to make sure when I get in, I can sleep at night, right?
Mhm.
Because at the end of the day, if the business is losing money, they can only be losing money for so long before the investor give up on them. And I don't want to get on that train of hope and speculation. There's always some taking calculated risk, but that's how I narrow down a lot of my list, right? My alumni said, Cody, once you said that, my list is small. I'm like, great. That's what I want. I don't want a small basket of stocks I look at. I know them inside out. I know how exactly they make money. So I know if the market turn, if another COVID hit, are they going to survive? Do they have a lot of cash? I look at all those stuff. So I know whether I should average in, right? Or should I just hold, or even I need to take losses, right? But I know it's not, I won't panic because, I just bought a stock or sell puts on a stock I never want to own. Then it's a big trouble, right? If the stock price keep going down, you don't know the reason why, the money's not making money, your emotion can change overnight.
And if you place a trade, let's say a short put, and then it goes against you because you are selling options on underlyings that are strong brands, they're large cap, they have solid fundamentals, do you usually roll that option if it gets challenged, or do you have a tendency to take ownership of it and then like run the wheel or sell covered calls on it? What's your preferred way and methodology of dealing with the challenge position?
I love it. I love it. You're definitely on the same boat. So I taught how to roll, and the reason to roll in my intermediate course, I don't teach that in beginner, because in my opinion, you have to go through the whole selling put and the scary moment. I'm getting a sign for the first time because the stock tank to, okay, I sell out of money cover call. Now I get called away. Whoo, that was a roller coaster ride, but I survive and make a lot more money. People have to go through that. So if I teach people how to roll, people say, Cody, I never want to get a sign. But when you think about the true reason why you sell puts is because you want to own a good stock you want to own. So why do you want to roll it every time? The only time I'll say I'm rolling is because, let's say, if some of my alumni accidentally use too much margin, they might get margin call. I'm like, hey, you know what? I'll help you, but snap out of your hand. Remember this feeling. You almost get margin call. I'll help you roll it so you don't have to outlay so much money to avoid margin call. Or I'll help you, sell a naked call up here just to save you on the margin requirement. But this is not the right way to do things, okay? And rolling, a lot of time is just really mental, right? People say, I want to get lower. But yeah, you could if you really don't have the money to get a sign, or you all of a sudden think that, oh, maybe I'm too heavy on that sector or short-term stock, then you can roll some, get a sign some. right? But at the end of the day, there's nothing wrong with getting a sign and just keep it simple as well, right? In my opinion.
There was so much there that I think is incredibly valuable to the viewers. And there's a few things. The first is it's really important to try to mitigate portfolio volatility. And similar to what you mentioned previously about when you were day trading, I think that the stress that goes along with having a losing position, or when you sell options to have a challenge position, is really something that traders need to experience. And the more you experience having a challenge position, the better you're going to get at acclimating yourself and feeling confident and not stressing out about having a challenge position. The second thing is that by having a strong brand in a large cap liquid underlying, you're going to feel inherently much more comfortable with having that challenge position, because you're not going to be concerned that the stock is going to get cut in half after you've already sold an out of the money put option on that position below the current market price. So if you're trying to sell options on speculative companies, then you have a lot more anxiety. Whereas when you sell options on large cap stocks, which are strong brands with solid fundamentals, then you will feel more comfortable. I definitely think that it's so vital to get acclimated and to feel comfortable with having a challenge position and just get confident that everything's going to be okay. The other thing is, which I love that you said, assignment is not a bad thing, because just like you said, the primary reason that you're going to sell, initially, you're going to target selling options on an underlying that you would be okay with owning. And remember that when you sell options and either you close out that position early or it expires worthless, your maximum profit for that position is only going to be the amount of premium that you received. But if you actually receive and you take assignment of that stock, then you can participate in the upside of that stock. So if a stock is oversold, let's say something like PayPal, which about 2 to 3 months ago was trading at $310. And then just last week, actually, I think just this Monday, because right now it's what's today, like
190 something.
Yeah, like I think today, right now, it's like December 8th or December 9th. But on Monday of this week, PayPal actually hit a low of around 179. And right now, I think today it was down like $5. It's trading at about like 192 or 193. But think about it reasonably. PayPal is something that has strong cash flow with a very strong brand. And a few months ago, it was trading at $310. People bought this stock at over $300. And if you have the ability to get assigned and to own PayPal at about 185 or whatever your short put is, then your probability of profit is incredibly high that you'll be able to participate dollar for dollar on the upside of PayPal without even selling covered calls, simply by taking assignment. But the last thing is, and this goes into something else that you discussed, one of the big problems is that traders, they get too greedy and they trade too large. And because the buying power requirements for assignment are different than the buying power requirements for selling naked puts or for selling vertical credit spreads, then oftentimes traders do not position themselves in an optimal situation where even if they wanted to take assignment and to be able to participate in the upside, they can't, because then they will be forced into a margin call.
Correct. Yeah, you interpret it really well. And really, just one small thing to add on is, like Warren Buffett said this, right? Get greedy when others are fearful. Get fearful when others are greedy. But if you use too much margin, use the money you don't have, you trade too big or overtrade, you don't even have the choice to be greedy when others are fearful. You are extra fearful. And guess what? If you're like, Cody, you only make 1 in 4%, I'll throw you out the door. Guess what? Another COVID happened. If you have been making 8 to 10% per month. If COVID happened the next time, you get margin call, you're gonna get wiped out 50%. So you've been making all these great money, but if you get wiped out 50%, you will end up with less money with what you start with. You're gonna start questioning yourself why you put in so much time and make such a dumb mistake. So I've seen it. I've seen people who done it, right? Friends who done it, and They really have to learn the hard way, but I wish no one has to be in that shoes. That I was helping some of the alumni, they got too greedy, helping them roll, helping them get the margin requirement down, helping them transfer money in, and then all the broker were all shut down at that time. It takes them 4 hours to pick up calls, right? So I was in there with them, but I wish no one has to experience that. And you're always preparing for another big market downturn. You always make sure your portfolio is okay taking all assignments, and you can still have a drawdown of 30% really.
And the other thing is the 1 to 4% is the average on like a typical month. But if you're able to trade small and then you do experience something like March 2020 and then volatility increases over 50, then instead of making 2 to 3% a month, if you're positioned very well, you will actually make about 7 to 8% a month, because the amount of premium that you're collecting is going to be 3 to 4 times more than what you would have had it been February of 2020. So the amount of premium that you were collecting in late March 2020 relative to February 15th of 2020, you were collecting 3 to 4 times more premium just because there was significantly more fear in the marketplace.
There we go. So since you touched on that point, I'm going to dive a bit deeper too, right? VIX before COVID, it was around 10 or 12.
Mm-hmm.
When COVID hit, it went as high as 80.
Yeah,
right now
84. Crazy.
Now we're back down to about 20, somewhat 30, right? Bouncing, but the average of VIX for the last 30 years is 16 to 20.
Mm-hmm.
So if you push too hard when the VIX, which is the volatility of the entire market, is very low, you are setting up yourself for failure, because the moment something happened, first of all your position going to get challenged. Second of all, you have no money to sell more put, which is the better time to get in. So be greedy when others are fearful, but be fearful when others are greedy. When everything is good, like for me, I don't want to use all the money, so I'll actually transfer the money out of my account. I don't use margin, so if I transfer money out, that means, okay, I stop. But if something, volatility spike, okay, money back in, right? So that's how I pace myself, right? And then, there's people that can take their profits and put it in other more passive way, whether it's an index fund, ETF, whatever, take it out to buy more real estate, whatever that is, right? But it's depending on, the more experience you have, the more you will know what I'm talking about. I'm pretty sure Dave knows what I'm talking about. And I just hope all of you guys who are listening can get some out of it. And Dave and I are not trying to hide anything. The reason we say certain things is because we have seen it, experienced it, and we don't want you to make the same mistake. It's painful, right?
And playing devil's advocate, let's say, because usually when the VIX is really low, then that means that the market is hitting, like, for the most part, it's like hitting all-time highs. Like in February 2020, when the VIX hit a low of like 13 or 14, and stocks were pretty much like going up every single day. So what would you say to somebody who says, hey, the market is going up like every single day and you're selling options, and because the VIX is really low, I'm not really collecting a substantial amount of premium. In this situation, I might be better off just buying stocks and hoping that the market continues to go up. So I think that one of the problems that I have is that when the VIX is really low, that's actually not the best time to be selling options. So usually when the VIX is low, I'll allocate maybe like 15% or 20% of my account, because I still want to take advantage and have some positions on, but I don't want to get caught in a situation where the VIX increases from 15 to 30, and then I find that I have to defend the positions that I just put on last week. So what would you say to people who may be new traders, and they might say that when the market's hitting new highs and the VIX is really low, that they believe that they're better off just buying and selling stocks as opposed to selling option premium?
I mean, when the VIX is low, selling options is definitely making you a lot less money. But for me, or whatever I teach to all my alumni, is this: where I tell you 1 to 4%, but that's not a goal. We have our strategy, but the market will tell us how much we can make. So we don't push or force things that are not right. We do the right things. The market will tell us how much we're making this year. right? Then we never get into trouble. Now, if you say you set a trading goal, say, Cody, I need to hit 4%. That's how a lot of my alumni got into trouble. Now, when the VIX is low, right, the IV is low, premium is very low. So they need to do double or triple of the amount
Or
of
contracts. That's
contracts.
risky. Yeah, and then if fixed doubles, and in September it doubled, and actually just like I think last week when the or maybe even was it last week or maybe early this week where one day
Yeah,
the
there was
VIX
a
was up
spike.
50, it was up 50%, 54%. So in that situation, if you're trying to hit 4% a month and the VIX's volatility is really low, then that means that you're trading probably about 2 to 3 times larger than you should be, and
Yeah.
that's then you're gonna get stressed out. I think one of the amazing things about trading options is that it's a great strategy where, like you said earlier, you had one of your alumni or one of your mentors who they can make money even when the market goes down. And there are many people who are option sellers who, if they were disciplined in March 2020 and they weren't trading too large, they were able to clean up in the latter part of March 2020 as opposed to taking massive losses. I think that for disciplined traders who do not get too greedy or who don't have an expectation that they're going to win 100% of their trades, and people who have a little bit of fear that volatility can increase by 100% in 2 or 3 days, or the market can correct 5% in a week, or potentially even more. Those people, from my experience, make the best traders because they're not greedy and they're always disciplined and they're just rinsing and repeating the same strategy that works consistently.
Yeah. And guess what? I have hundreds of alumni and I can testify that people who come back and say, Cody, I'm making 8 to 10% per month. I'm actually very worried because I know they're playing with the stocks that are outside of my comfort zone. They're playing with stocks I probably never heard about. Things could be great for months, but when the market turns, those stocks cut in half, you're in big trouble. So at the end of the day, from years of experience, 1 to 4% is a good balance, right? And it's very seldom we'll get catch, right? But if you try to aim for more, guess what? There's always going to be that one stock that you get cash that dropped 50%, and your NLV, net liquidation value, is always like hurting because of that 1 or 2 stock that you thought you can pull a quick one on it, but you get caught eventually. So at the end of the day, if you keep it simple, keep it the blue chip, you're like, it's the best life. The alumni who does that have the best life. It's like, Cody, I don't really look at my phone that much, and I could be right. I could be wrong, but I'm still right, making money. Like, this is great. And it's the alumni who push it a lot, overtrade, that get into trouble, right? They make good, and then bang, 50% down, right? And they're like, Cody, what should I do? What do you want me to do? Like, do you want to take loss? I couldn't make that decision for you, but you knew exactly what you were getting into. They're like, yeah, but what should I do? I'm like, it's up to you. How do you want to continue this moving forward, or what do you want to do, right? So that's a hard question to ask, but a lot of times it's a bit too late. And now yourself and myself are really trying to give people that vision. A lot of people can't see that vision. I'm telling you, we're not hiding anything from you. Is we've been there, done that. That's why we scale it back, right?
Yeah, and the losses hurt significantly more than the gains feel good. Like, I think that there have been a few studies that indicate that losses are about 4 times more painful than the ecstasy or the elation from gains. And like you said, if you lose 50%, then you actually have to make back 100%. And I think that you commented about like the 10% when you were trading futures, that if you lose 10%, you only have to make 11%. So you
Yeah,
always want to reduce the portfolio volatility, because if you're down 50%, you actually have to make 100% on your account just to get back to where you were.
correct. Correct. Yeah. And then guess what? There's a reason why a lot more people lose money in stock market, because a lot of time it's a mental game. Most
Yeah.
people cannot handle losing money, and they want to chase when they win money. But you have to think contrarian, right? You really have to be thinking the opposite of what people are thinking. When everyone is like, this is great, the market is great, anyone can make money, you got to be very careful. When everyone's like, sell everything, Cody, I don't like this, I gonna go back to real estate. Guess what? Those are the opportunity. right? And it's easy to say, but now that you kind of understand that, you have to spot that, and you really have to pull the trigger when think contrarian, right? When everyone's panicking, you really have to say, okay, we know exactly what we're doing. Company's going to survive this and become stronger, so you have to pull the trigger. Otherwise, opportunity would just, slip by, right?
I definitely agree. Is there anything else that you would like to tell the audience or discuss with the audience before we wrap up?
Well, I think if we want to discuss everything, I mean, we're going to be here for 2 days. So I'll leave that up to you. If you find any stones unturned, I'll let you ask that question, but I'm okay on my side.
Okay, and so I guess yeah, no, I think that's great that we've touched on a lot of things. I think that this call was extremely valuable, and when I compare it against some of the other calls that I've had, I love the fact that we touched upon the mental aspect where when you trade options, you're able to realize a very high profit for the amount of time that you're actually investing. And by gaining experience and getting your mental aptitude or your your mental headspace in the right situation where you're not going to take too much risk, or you're not going to try to make like 10% a month. Instead, you're in it for the long haul. You're there to try to reduce portfolio volatility, and you're also not in fear of assignment because you're not trading too large. That way you can participate in the upside. I think that that's an amazing takeaway message. And where can people learn more? What's your YouTube channel, your website, where people can go in order to learn more information?
Yeah, I mean, I have a YouTube channel as well. It's called Cody Ye Investing, CODY space YEH Investing. And I have a Facebook group of more than 4,000 people. I believe, David, if you want, you can put that link in the bottom. So it's all like-minded people. I run Facebook Live every Sunday, 7 p.m. Eastern time. And there's a lot of vlogs of value added and a lot of my alumni interview just for a case study for people to learn from for free. They're all free. And then you can ask questions in there, like-minded people in there as well.
Awesome. And then my YouTube channel is youtube.com/beststockstrategy. And my website is beststockstrategy.com. You can go there and enter in your email to receive $400 of valuable free options trading information. I think that this was an incredible talk. I'm really appreciative that we had the opportunity to sit down. I think that the audience has found this or will find this incredibly valuable. And Cody, I thank you for your time, and I hope to speak with you again in the future.
Yeah, pleasure being here. It's great to talk of someone who's actually teaching it. And when I say something, you know what I'm talking about. When you say something, I know exactly what you're talking about. And as it comes from experience, right? So I hope people really take away a lot of golden nuggets. We did drop a lot.
Awesome. All right, Cody, have a great night. Thank you for sharing your time and your experience with the audience. And I look forward to speaking with you in the future.
Yeah, ciao.